Hi. Let's learn about different types of lines of credit such as personal, business, and home equity. A line of credit is a preset borrowing limit that you can tap into whenever you need it. This means that you can take money out as needed until you reach the maximum limit set by the agreement. The LOC is an arrangement between a bank and a customer, setting the maximum loan amount that the customer can borrow. It's designed for flexibility, allowing you to borrow, repay, and borrow again. All LOCs have a set amount of money that you can borrow, repay, and borrow again. The lender sets the interest, payment sizes, and other rules, and there are different types of credit lines. Some LOCs let you write checks, while others include a credit or debit card. One major advantage of an LOC is that you can tailor your spending to your needs and only owe interest on the amount you borrow, not the entire credit line. Most LOCs are unsecured, meaning you don't need to pledge any collateral. One exception is a home equity line of credit, which is secured by the equity in your home. Secured LOCs generally have higher maximum credit limits and lower interest rates than unsecured LOCs. On the other hand, unsecured LOCs are more difficult to obtain and often come with higher interest rates to compensate for the risk. An LOC is considered a revolving account, which allows you to spend, repay, and spend again in a continuous cycle. Revolving accounts, including LOCs and credit cards, are different from installment loans like mortgages. Non-revolving LOCs have the same features as revolving credit, but the available credit doesn't replenish after payments are made. There are different types of LOCs, including personal, home equity, business, demand, and securities-backed LOCs. Personal LOCs are typically used for emergencies or events, while home equity LOCs are secured by the market value of your home. Business LOCs are used for borrowing on an as-needed basis. Demand LOCs allow the lender to call the amount borrowed due at any time, and securities-backed LOCs are secured by the borrower's securities. The main advantage of an LOC is the ability to borrow only what's needed. However, borrowers should be aware of potential problems, such as high interest rates, penalties for late payments, and the potential to overspend. Here are 4 key takeaways. 1. A line of credit, LOC, is a preset borrowing limit that a borrower can draw on at any time that the line of credit is open. 2. Types of credit lines include personal, business, and home equity, among others. 3. An LOC has built-in flexibility, which is its main advantage. 4. Potential downsides include high interest rates, penalties for late payments, and the potential to overspend. Hope this would help. Thanks for watching.